Is sentiment in the housing market about to turn? Interest rates are falling. There's been an increase in the number of homes up for auction. Borrowers will soon be able to access more money and investors like the coalition elections win. But experts say affordability is still a big issue. Patrick Lloyd believes the time is right to upgrade.
Found a terrace, which is a complete renovation job to move into. We found that and we thought it was the right time to move on that.
Now he's seeking to sell his 2-bedroom inner Sydney apartment.
We decided to go off market purely because it was a much more targeted approach with an agent bringing through kind of very interested buyers in the area.
He paid $700,000 for it 7 years ago, completely remodelled it and is confident of getting a good price.
Because it's so unique and it's in such good condition.
That price?
We're expecting above 1.1.
Patrick is selling at a time when market sentiment seems to be shifting. Last week, auction clearance rates rose to a 6-month high, while the banking regulator proposed to continue to relax lending rules. The Morrison government election win means no change to negative gearing, and it's promised to assist first home buyers with a 5% deposit. And next week, the Reserve Bank is expected to cut the official cash rate for the first time in nearly 3 years. But is that growing list enough to turn the market around?
It's very likely to slow the correction in prices, and we think there's a good chance that if we see this sustained, the market should stabilise over the next few months. We think there'll still be some price slippage.
Mr Hassan says the initial bounce in auction clearance rates comes from a low base and that the market has a bit to digest in terms of unsold stock.
Our concern is that affordability is still not really great.
Real estate search websites have not been any busier than normal either.
At the moment, search activity hasn't picked up,
suggesting buyers may still be waiting on the sidelines.
Search activity does pick up with a rate cut.
The banks are expected to pass on an official interest rate cut in full.
The main reason being is that there is very poor sentiment towards banks at the moment, primarily because of the Royal Commission.
Many are already moving, slashing fixed interest rate products. Some smaller players have rates with the number 2 in front of them, but only if you're a new customer.
Growth in home lending has really taken a slide and it is hurting banks' profit margins. What they need are new customers on their books.
But what the market needs to see before prices start to rise is a clear bottom.
Time is the main thing here. We need to see that improvement in incomes, a more sustained improvement in affordability.
The Reserve Bank Board meets on Tuesday.